I used to be a goalkeeper, actually. Hello, everyone. And the reason we're on the sports field is that it's time to be active. It's time to be very active with your stock portfolio. If you don't have a defensive position in yet, and we've been talking about it for weeks, what have you been doing? It looks really bad. Let's be frank. A whole lot of other people out there want to sort of tippy toe around the edges. Oh, it's reweighting, it's this, it's that. No, it's looking like a bear market that could last for quite some time. So what do you need to do? You need to diversify. I've been saying it. Go short oil, go short the Australian dollar, buy gold, buy Aussie gold, maybe look at some gold miners, although they will be heavily impacted by the overall stock market sentiment. So maybe the pure trades are the best. There's going to be individual stocks out there that still have very strong stories. I mean, Apple will always be a buy on the dip kind of stock. Tesla is a very strong company, but its stock price could still be a little bit overvalued. And the big global brands will continue to gain strength almost from the current situation. And as I've been saying for a while, there are, every company is raising its prices. That means its profit margins are getting bigger because you can be sure the price rises are bigger than the input cost rises. So those strong input prices we saw in the US yesterday, it means accelerating inflation, not transitory inflation. Okay, this is where the whole global market sentiment, most of our competitors have got it wrong. I'm sorry. Sometimes our competitors get it right and we get it wrong, but on this occasion, I really want to stress these 2 points. One, inflation is not transitory. It's going to get worse. Two, vaccinations do not equal economic growth. Vaccinations are great, absolutely. Encourage cautiously. Some are better than others, we know that. But not even the vaccination, the pharmacy firms themselves said that their products were 100% foolproof. Pfizer, AstraZeneca, they never said, take our vaccination and you're totally protected. And yet that's how people have been treating the idea of vaccinations. So that's been a big myth. And also the vaccinations are less effective, still effective, but less effective against Delta. And now there might be a new variant coming out of Indonesia that's wreaking havoc there. It might have mutated yet again. So keeping up with this thing is an ongoing struggle. It's not, Pfizer, AstraZeneca and others invented a vaccine, it's all over. It's not that. And I don't understand why people equated that to economic growth anyway, because even if there was zero virus in the world right now, and we could all go about our lives normally, our economies are not what they were before, and it will take time. Australia has outperformed because our stimulus measures were as massive as anywhere else in the world, if not more, and we've had low virus cases. So we've had low real economic damage through health issues, and yet we've had massive stimulus. So that's why we've been strong, but it's still an artificial strength, economic strength. And we need to be very cautious here that an underlying weakness in the global economy, in the US economy, has been masked by stimulus measures. The economies didn't get strong because of vaccinations. The economies around the world that did get strong, like the US for a period, had a surge, which is now rolling over, which we forecast would roll over when it was strengthening. So we've been way ahead of the curve. So that's why I think I have a basis for asking you to listen today. Please be careful about your stock investment portfolio. If you have long-term stocks, probably hold, right? But if you have short-term speculative positions, you need to actively manage them. And I say actively manage because for all I know, standing here today, I could be wrong, and the market's about to shoot back up again, as it has done numerous other times, although this time it does look very different. This time it's looking like an entrenched bear market may already be here. Now, on the yield front, why do people continue to think that a higher yield means lower stocks or a lower yield means higher stocks? Throughout history, it's a 50-50 relationship. And often both are reacting to the same stimuli. Of course, US yields, bond yields are going to go down when we're having a sharp falling stock market or an economic contraction again. And remember, Israel has the highest vaccination rates in the world, and it's just had another economic contraction. Other issues may be at play there, but still, highest vaccination rate, economic downturn. So the point I'm making is that if people are worried about the economy and they sell their stock portfolio, they're going to buy bonds. And if they buy bonds, the bond yield falls. So of course, you're going to have falling bond yields and falling stock markets. That is an absolute sign that most people, big funds in the world, investment portfolios in the world, are already unwinding their risk in a big way, in a semi-permanent way. This could well be the top in stocks for the next 1 to 3 years that we've just seen. I called the top in oil. I said it was a major top. Even when we had a couple of sharp bounce back rallies, I said they were rallies to sell. Oil is now in serious trouble because the global economy is going to slow as supply is being increased. Oil has topped. The Australian dollar above 77 cents, 77.45, I said it's going to 70 cents. And that was when everyone else was still bullish. We're halfway to 70 cents. We could even go as low as 68.50. Gold is going to become such an incredibly attractive hedge, right? And please don't mention Bitcoin as a hedge. Please don't do that. It's just not, okay? So gold, you can hold it in your hands. It's real. And it has a real purpose. It has manufacturing and industrial value. So gold will become increasingly the go-to hedge as well as US bonds. At the same time, US corporations will be repatriating funds back to the US as quickly as they can because they see themselves as heading towards better vaccination rates, which don't equal economic growth, but a lot of US investors think it does. So this is going to mean a stronger US dollar, which again is a pressure on the Aussie dollar. And gold will surprise. It's being held at the moment by the strength in the US dollar, but it's holding up against a surging US dollar, and any pauses in the US dollar will see gold lift rather high. I've tried to cut down my coffee intake. That's why I've got a few words wrong today. I should have my coffee before I do my talk. So that's another thing. Do cut down on your coffee. It will help. So strong US dollar, weak currencies, strong gold. Aussie gold looks great. That's really, I think, still the best trade out there. And there's going to be individual stock stories, and you have to look at that. And long-term stocks may end up going higher, but just at the moment, it looks very, very dangerous out there indeed. So I hope I've helped. Have a very good day. Clifford Bennett, Chief Economist, ACY Securities. Thank you.